All right, welcome back, Boss Wizards. Let's talk about the S&P 500 here. Uh, Last count hasn't changed. Okay, multiple ways to count this same price action, which we'll talk about. But I prefer the flat only because I can isolate a valid impulse right here. Right, there's the same thing I can do in the zigzag. I see a lot of counts of people counting this as 5 waves. I'll show you that here in a second, but um, more of an educational thing than anything. It's not like it's invalid, but um, we're lending to probability. Okay, that's what we're really after here. What is most probable? And really, the future is going to tell us what it was, but we have to make our best guess in the meantime. But anyway, yeah, 5 down, expanded flat, 3 back. Okay, 4 a wave 2. All right. Now the alternate way to count this. I'm going to go ahead and close that. The alternate way to count this would be in an expanding diagonal, where you would go 1, 2, 3, 4, 5. Okay. Um, and here's where we're going to talk about this as a zigzag and not an impulse, because some people could say 1, 2, 3, 4, 5 within, don't mind the degree, okay? You can drop down the degree, whatever you want. Here's the problem, okay, with this. It's not invalid per se, okay? But your 2 and your 4 lack alternation. All right, they're both zigzags. All right, whereas if you can break this down in a different manner, and we go to a smaller time frame, I'm going to go down to say the hourly, right? All right, now you can see 5 in here, right? So that can be an A wave and a B wave, and then you have a little flat right here, right? You could isolate this. This is what I'm talking about, isolating an impulse. There's a flat, and you have alternation with a zigzag right here. So while it appears that these two are the same degree, in reality, I think it's more probable that these two are the same degree. Okay, because you have alternation there, and you have every rule met. 3 extends past the end of 1. 3 is not the shortest wave. You have alternation in your 2 and 4. Therefore, this is an impulse, okay, which leaves you with this is an impulse, and you only have 2 impulses. Okay, therefore, it's a zigzag. A, B, C. Okay, and that's my general guideline and my rule of thumb. Not to say if somebody labeled that as an impulse, it's invalid. It's not. I just think it's more probable that it's a zigzag for that reason. I can isolate that impulse, and that's the method I use to count probabilities. Okay. Second problem with this count, I'm going to go down into linear, is that okay, we have the 1, and your 3 is longer than your 1, but your next problem here, as we can see, 100% of this is the 100% extension of 3. 5 fell short of that. That breaks a rule, right? Now, I call it a soft rule. Okay, we have to deal with real life sometimes, um, because it happens. It's not a hard rule. Hard rules are here. I'll tell you what the hard rules are that absolutely cannot break under any circumstance for a motive wave. Okay, any motive wave, and this goes for diagonals or impulses. Okay, 3 cannot be the shortest. 3 must extend past the end of wave 1. 2 cannot go past the start of wave 1, and 4 cannot go past the start of wave 2. Those rules cannot break under any circumstances. They are hard, they are set in stone. I don't care what time frame you're on. Okay? Other than that, everything else is pretty much a soft rule that you don't want them to break. Okay, but every once in a while you might get a soft break of one of the other types of rules somewhere. Okay, and I'm talking about motive waves in particular. There's other hard rules for other corrections, like zigzags, right? B can absolutely, it's same as a wave 2 rule. B absolutely cannot retrace the start of A. It's not a zigzag. Okay, it absolutely has to. Um, anyway, if you would count it like this, and you're going to make a soft break on the 5, excuse me, because it doesn't go far enough, then you're just left with a zigzag, right? You would have 5, 3, 5 right here, and you can see the 5. Okay, 1, 2, 3, 4, 5 right there. All right, and you start it down. Okay, you're just starting your impulse down now. You're probably in wave 4 of a small degree 1. Okay, and here 1, 2, 3, 4. You're going to get one more flush. You'll retrace, and then it's off to the races. Okay, so that's the alternate way to count this bearishly. Now, how would you count it bullishly? Well, there's only one way, and you would have to believe that this, you're just borrowing from the diagonal idea, that this is a triple zigzag. Okay, and that's why I say there's only one way. Sure, you could try to count it as WX, and then this is a zigzag for Y. Okay, but then we run into the problem, which is why I specifically counted this out on a smaller time frame, and I can isolate a impulse here. That if it's going to be just WXY instead of a triple zigzag, then that has to be an impulse. Okay, and it is more probable that it is a zigzag and not an impulse because you lack alternation here. All right. All right. That would be a triple zigzag. Okay, and then instead of this, what I just counted ABC, okay, you're just simply using the same exact structure, and you're going 1, 2, 3, right? You get a 3-wave move here for a 4, and you'll get your 5. Okay, and you likely break that high, but then it's not time to buy. Doesn't matter if this high breaks. Okay, people think that high breaks, it's bullish. Here we go. No, what their market's going to trick the hell out of you. So you get like a little expanded flat here or something, then you're going to get 5 waves up, and it's like, let's go to the moon. Well, you got 5 waves, buddy. It's getting retraced. Okay, it just won't break this low. Okay, so be on the lookout for that. But I don't think that's probable. Okay, because in order to get that, okay, you have to think about what you're retracing, right? In order to go higher here and break this high and keep going, you have to be of the belief that we're simply retracing the 5 waves up from 2009, or I'm sorry, from 2020, right? Which you would have 1, 2, I think it's here, 3, 4, 5. Okay, and then this is an extension in the middle. What is a triple zigzag, right? What is a triple zigzag designed for? A triple zigzag, the first zigzag didn't go far enough, so you get another. The second zigzag didn't go far enough, so you get yet another. Right? That's the market trying to give you a further retracement than it gave you. But what's the guideline, right? The guideline is wave 2 should end just beyond the territory of wave 4, right? And you can even use the third wave extension here. Okay, 1, 2, 3, 4, 5. Okay, we'll bring that down, change colors so it looks pretty. Okay, so you can even use this 4th degree, right, since it extended and not this one. So that's where it should have retraced to. You accomplished that mission with the first zigzag. you end just beyond the territory of the previous wave 4, the extended wave 4 rather. First zigzag, mission complete. Let's go. Nope, I'm going to give you another zigzag. Okay, why? Now you're down in the previous wave 1 territory. Whatever. Let's go. Nope, another zigzag. Why? Why'd you do that? Right? If you're asking yourself, if you can say there's something wrong here, why am I getting all these zigzags for a simple retracement that met all the guidelines already, right? It gave me a 50% retracement. I didn't need a 50% retracement. Even if you want to go with a Fibonacci retracement of say 61.8 or 78.6, it didn't even get there. You got 3 zigzags that couldn't even get there. Nothing about stopping here makes any sense whatsoever. If you can tell yourself there's something wrong with this market, well, we're proprietors of probability after all, correct? So let's talk about then what's probable. If this doesn't make sense and we're not retracing this wave, then what are we retracing? Look bigger. Okay, always look bigger. If you're not retracing that, okay, then you're retracing that. And we could even go further, okay? I'll ask the same question here in a minute, okay? But then you say, okay, probability is, I'm going to delete that count, that all of that, if you're retracing all of this now since 2009, well then you got 5 down, and that's an A wave, and that's a B wave, and what's the guideline? And just beyond the previous wave 4, right? Well, we can label that out. 1, 2, 3, 4, expanded triangle, 5, right? So the guideline is your C wave should bring you somewhere down in here, which would be A, B, C. Okay. But what if it goes even further? Right? What if we come down? Now I'm projecting into the future now, but what if we come down like this? And you're like, boom, we made it. Let's go. What? Now what do you have? Now you have another 5-wave move, right? I'm saying if that happens. We don't know if it's going to happen yet. Okay? All we know is that it doesn't make sense for this to extend at this point. So if that happens, well, shoot, I've already met the guideline. If I'm not retracing this, then what am I retracing? Let's look one bigger. Holy cow. Okay. 1, 2, 3, 4, 5. Well, what's that guideline? You're going to bottom just beyond the territory of the previous degree. So, and if you get 5 down here, then that is an A wave, which you're going to have a couple of years, and everybody thinks the bull run's going to come back, and then you're going to get your C wave like that. Boom, 1, 2, 3, 4, 5, and that's going to be the nasty one. You think it's nasty now, that's going to be the nasty one. Okay, if that's what we're retracing, we're going to have to see. If you get 5 waves down, that can only be the beginning of a bigger correction. Okay, so that's what I'm after right now. This is why it's so important to be watching this right now. You can't just blindly be a freaking bull and start buying. You're buying right now, you're buying potentially the biggest top that has ever existed in your lifetime, in your children's lifetime, in your freaking great grandparents' lifetime. Okay? Complacency is at an all-time high. we bring that back up, let's go back down to the daily here. Let's get rid of this. Bump, bump. Bring our bear count back up. Okay. It just seems to me like this wave 2 has lived its life like a candle in the wind. It's gone. So we're going to see what happens here. It's beautiful, though. Seriously, though. You got a head and shoulders, okay? You got you a head and shoulders. All right? Last chance. Last chance. Okay? Let's talk about Bitcoin. Let's talk about bosswizardcrypto.com. Check it. These are my charts. Okay? You can see, if you join my Discord, okay, not only do you get to see all the trade entries and stuff like that, you're getting weekly content that you don't see here on YouTube. All right? It's only exclusive to the subscribers. Educational videos on how to practice Elliott Wave. Access to the Discord community. You have questions, you want to talk about stuff, it's all there. It's all organized into different topics. Okay? Get the charts. As you can see on the charts here, these are all the charts I have. I'm adding more all the time. Okay? It's only 25 bucks a month, people. You can buy a year at a time if you wanted a discount. Heck, if you want to be hardcore, you can go lifetime. All right? So now let's talk about the Bitcoin. This is one Bitcoin count. Okay, this would be bullish. This would assume 1, expanded flat, 2, 3, double zigzag, 4, 5. It's kind of janky 5, but you can make it happen. All right, you got a big ass 4 compared to say itty bitty 2, but hey, it's illegal, so we can roll with it. All right, that would be a 1. And then you've started down in a big ABC correction. Okay, you're getting 5 down right now, and we've been trading based upon this. Okay, because don't matter what count it is, bearish or bullish, every count is pointing to 5 down right now, and that's exactly what we've been getting. Exactly what we've been getting. We had trade entries here, here, here. Okay, we had all of that stacked to be short in my Discord, and then we got it. Big dump. Okay. 2, 3, working on a 4 or another 2. We don't know yet. I have a count to support another 2 as well. Okay, 5. Okay, then it's going to be taking profit time and have an exit strategy on this big short that we had. All right, and I explain how to take profit and everything in the Discord, but you got to join to see it. Okay, that would be an A wave under this count. Okay, and then you're going to get 3 waves for a B. It could be anything. It could be a zigzag. Okay, it could be a flat. Okay, it could be a triangle. All right, and a B wave could be anything. Okay, it could be a combination. All right, but you're going to get a B and then 5 more for a C. Okay, and then likely would break this low. Okay, and then that's buy time. All right, that's one count. Let me show you the next one. All right, also bullish, which just counts it slightly differently. You would have a 1, a 2. Okay, you could even put the 1 up here, right? And then this is a zigzag for a 2. It doesn't make a difference. You're going to wind up in the same spot. All right, then your 3, triangle 4, and 5. All right, just makes your 2 massive. All right, again, doesn't matter. You could put your 1 here and it's still fine. Okay, that would mean that your first wave was extended, and then you got a a zigzag for 2. All right, and then 3, 4, 5. Then you got a double zigzag A wave, a zigzag B wave, which is what I think this is actually. I don't think it's a fifth. I think that this is a zigzag. All right, makes a lot more sense, structural wise. Then we have 5 down in a flat. You're getting an expanded flat. A, B, okay, and then 1, 2, 3. Whenever that's done, 5, and then it's buy time. Right? That would be 1, 2. And then you go to the moon, right? That's the other Bitcoin bullish count. I got a third count that is much more bearish. Stand by. Count. Again, you can count this multiple ways. Same thing. Okay, I'm choosing to count it this way for a reason. But essentially, I didn't label all the subwaves of this, but this would be A, B, C, right? And then this would be A, B, C, and you have WXY, all right? And that's a double zigzag. And you've started down, not 5 to end, but 5 to begin, right? We'll have to see what happens. You could borrow the other impulse from the other 2 counts here. Like I said, that's why we were so short up here on this Discord, because every count I had, bearish or bullish, it did not matter, all pointed to getting 5 waves down. So why not take advantage of that? You've pinned the market into a corner where it could only give you one thing. So heck yeah, we're taking advantage of that. And the trade has worked out absolutely beautifully. And we're not done with it. Still need a 5th wave. Okay? Still need a 5th wave. You're going to break this low. Okay? That is going to happen. And actually in some charts it's already broken. I've never been so sure of something in my life. Mostly because it's already happened. That low is already broken on leveraged exchanges. Okay, this is the spot index chart. The low did not break yet, but it will. You're getting a flush. You will get a flush eventually. That will happen. Whether you come up first, a little bit higher, okay, and and a 4 or another 2, right? I don't know, but you are going to flush out here. Anyway, how do you get to this, right? Well, WXY, okay, would assume, and you can go back in my other videos and explain it in a little more detail, okay, but you need to connect it somehow, right? So if you got WXY here, then that would assume that this 5 down is the beginning of something, right? Which means you've topped up here. The all-time high was a true top, an orthodox top, if you will. And you got 1, 2, 3, 4, 5, right? This here being a barrier triangle for your wave 4. Barrier triangle. All right. And the book even tells you that after a barrier triangle, you get one of 2 things. Either very short, brief 5th wave or a very extended 5th wave. Okay. They say, oh yeah, well, it could be either or, right? Well, the the counter is, a normal sized 5th wave. Okay, that would be parity with 1 or 61.8% of 1 and 3. Okay, that would be what happens most of the time with wave 5. The difference is after barrier triangle, the book is telling you to expect this itty bitty teeny tiny wave 5. It literally says those words in the book. Expect a brief 5th wave, which is exactly what we got, which lends to probability, right? The textbook tells us expect a brief 5th wave, and that's what we got. So that gives you confidence that this is in fact an impulse. Now, the only question was did this impulse begin something or end something? Okay, so in the 2 bullish counts I showed you, right, then this impulse would end something, which would then assume, okay, that this here was a 3, and then you got 3, 3, 5 expanded flat, and that's a big wave. 4, and then the two bullish counts come into play because now you're going off into your wave 5. Okay, it's going to be 1, 2, 3, 4, 5. Right. This count in particular with the WXY up. Get rid of these so you can see them. That's why I didn't have the subwaves labeled, because on this time frame I want you to be able to at least see the W, and I'll highlight it for you. WXY. Okay, three wave move, double zigzag. Okay, that on this time frame just looks like a zigzag, which makes sense. A double zigzag is by nature a zigzag. Okay, but the subwaves didn't subdivide that way. It give you two zigzags instead of 5, 3, 5. Right. Regardless, if this is a top, okay, let me go in a log on this chart because it'll be a little bit easier to see. Whoops. Go in a log. Okay. Because you have to look at the bigger picture, right? If you had 1, 2, 3, 4, 5, okay, then this is the beginning of something, right? That's a 1 or an A wave. We'll give the benefit of the doubt that it's an A wave, right? I see some people out there counting that it's going to be a double zigzag, right? That this is an expanded flat. Very doubtful. Okay, very doubtful. If it ended here, okay, I'll zoom in here for a second. If it had ended here in 5 waves, then I would be much more apt to believe that that's 3, 3, 5. Your problem is that you can't begin a pattern with a triangle. Okay, so that 3 waves. Okay, then you'd be borrowing the A wave, right? You'd say that that's 3. Okay, which it is. That's a zigzag. Okay, it's a messed up looking zigzag, but it is one. It subdivides. Okay, and that's 3. Okay, and then that would be 5. I would believe that is an expanded flat. But again, like I said, here's my rule, and I talked about it in S&P 500. If I can isolate a valid impulse, which I can, that's always going to be my bedrock. This 5 down is a textbook description, right? A literal textbook description meets all rules. The proportions are beautiful. If I can isolate an impulse, why am I going to try to pick it apart and make it a flat, make it something that it's not? Okay, I don't need to. If it's corrective, it's a freaking zigzag, okay, or double zigzag, same thing. It accomplishes the same objective, okay. It's a double zigzag, and that's your A wave, and that would be your B wave, okay. And then the expectation is that which you've already started, by the way. You're going to get 1, 2, and then an oh my god 3, right? 4, 5, and that's going to be your C wave. And you're gonna bottom somewhere in here, right? In this gobbledygook of fucking range right there, right? And that would be the expectation. And this lends back to another rule that I have, right? I'm only going to count a combination if it combines, right? I'm never going to start my count assuming that it's a combination. I can isolate an impulse. Why am I going to make this? Why am I going to turn this into a W? Because this is the trap you're going to fall into, right? This is where it's going to hurt you in the end. If you assume that this is a W, okay, and that this is a flat for an X, okay, what's your expectation now? Your expectation is now 3 waves, right? So then you're going to say, okay, 1, 2, 3, boom, there's my Y. We're off to the races, and you're going to buy, and then you're going to get wrecked. because the market gave you 5 waves and it's going to end it in 5 waves, not 3 and 3. That's my recommendation to all y'all budding Elliotticians out there, is look for the simple pattern first. Okay? Not everything has to be a combination. In fact, it's rarely a combination. Okay? Now this happened to be, okay, but you're going to tell me then you got a zigzag W, okay? You got a flat for your X. You're going to get 3 for your Y. And the whole thing is a combination? Why? Why are you forcing that? There's no reason to force that when you have an isolated, valid impulse. So make it simple. Keep it simple. It's 5, 3, 5. Stop jumping down that rabbit hole of combinations. Let the market tell you it's a combination. Don't project that it's a combination. Okay? That's my advice to all you Elliotticians out there with all these crazy counts all over YouTube that it's. And then let me tell you another thing, okay? Combinations within combinations, okay, is not legal. It's not even a debate. It is literally a line out of the book, word for word. A combination combines simple patterns. It does not combine combinations. The moment you start letting combinations be components of combinations. Now, I'm not talking about the X wave. The X wave can be anything. I'm talking about the W and the Y wave. If you're letting that your W and your Y wave be combinations themselves, first of all, you're wrong. You're just plain wrong. And you will be wrong, and you're going to be confused in the end because you'll be like, why isn't it doing what I thought it was going to do? Because it's not legal. You can't have a W wave combination. W, Y, Z, if you got that far, has to be a simple pattern. A zigzag, a flat, or a triangle. Any one of the 3 kind of flats is fine. That's a simple pattern. Okay, a regular single zigzag, any one of the 3 types of flats, or any type of triangle. And a W can't be a triangle. So if it's a W wave, you better have it labeled as a zigzag or flat. That's the only thing a W can be, is a single zigzag, an expanded flat, a regular flat, or a running flat. That's it. That's the only thing W can be. If you have it labeled as anything else, you're wrong. Okay, so that's the Bitcoin bearish count. And if you see, that actually lines up pretty well with the S&P count. Because what did I say on the S&P? That you've started down, you're going to get a pullback to trap the bulls. Okay, and then it's going to be, oh my God. Right? That's what's going to happen. Same thing in the S&P. You started down, everybody's lulled to sleep, complacent. All right, fine, we're done with this correction. And then bam, blood in the streets. Okay, and that's going to happen this year. Can't tell you the day, I can't tell you the time. It's going to happen. All right. So, unless Bitcoin goes off, like I can have a count to support it. We're going to see. Unless Bitcoin is going to be completely divergent from the U.S. markets. The U.S. markets are toast. I'm telling you that right now. They're freaking toast. All right. Now let me show you something. This is a Boss Wizard exclusive. All right, and I saved this to the end because I want to see how many of you guys actually stick around to watch. All right, and if you see it, and I'm going to show you this, go ahead and drop it in the comments. It's called the Big 7. No one else is going to show you this. Okay, what is the big seven? The only seven stocks holding up the entire U.S. market. Okay, the rest of the U.S. market, the entire New York Stock Exchange has already started down. There are only seven individual stocks that have large enough market caps and have large enough interest right now that are propping up the entire thing. And I've combined them all into one chart. I'm calling it the Big Seven. That's Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Okay. Clear 5-wave and 100% legal expanded diagonal that subdivides beautifully down from the high. Okay, that's 5 waves down. And what have you got back up? 3. That's a zigzag. 5, 3, 5, zigzag. It did not break the high. Now it is a deep retracement, I'll give you that. But it didn't break the high, and that's the rule. Wave 2 cannot retrace past the start of wave 1, and it did not. And you've started down. Okay? This low breaks. Okay, that's what you need to watch on the Big 7. And you're only getting this Big 7 chart, 1, if you make it on your own, or 2, if you subscribe to bosswizardcrypto.com. And you can sit and watch this chart live. Save it. Keep it forever. Save it as your own. Once this low breaks, it is confirmed that you have 5 waves down. Now you're going to get a climb back up, just like the freaking S&P and Bitcoin, okay? To trick you into thinking that you're going to the moon. But then, just like Bitcoin, just like the S&P, bam! Blood in the streets, baby. Blood in the streets. All right, this is a Boss Wizard exclusive. The Big 7. The only thing, once the Big 7 crumble, it's going to take the rest of the market with it. It's going to take the U.S. stock market with it. It's going to take Bitcoin with it. It's going to take all of it with it. Okay? The Big 7. Now I'm going to give you one nugget. It's a personal count, a personal chart that I'm watching right now that I'm actually going to be ready to buy. Because you're like, hey, right? I can't buy anything because everything's going down the shitter, right? Well, I'm going to give you something that you could buy and make some money on. Okay. I've been watching this for a while. Okay, I have this labeled as a larger degree wave 4. Actually, that should be 1 degree up. I don't know why I have that like this. Boom. There we go. All right. 5 waves up. Okay. You got a zigzag down. Now, I initially looked at that, and what's the guideline? I've said it multiple times here. The guideline is that wave 2 should bottom just beyond the price territory of the preceding wave 4. Right? Well, we got this first zigzag, and it didn't reach it. Okay. It's in the price territory, but it didn't get to the bottom of it. So I said, well, it's not a rule, it's a guideline, but let's see the reaction. I'm not ready to buy yet. So we got this reaction, okay, and I'll even show you on a smaller time frame here. I'll come down to the hourly on it, all right, where I have it counted out, okay. You got 5 waves up and an A wave, 3 waves back and a B wave, okay, or it could have been 1, 2, right, and I'm like, all right, 1, 2, 3, 4, 5, there's my C wave, could have been a wave 3, okay, I said, now prove it to me. Give me this 3-wave move. I'm like, okay, that could be a 3-wave move here for your 4 or another 2. Break the high. Prove to me you're going to give me 5 waves. It didn't. It kept going. So my initial inclination was that this was going to be a W wave. And what did I say W waves are? What do they have to be? They have to be simple patterns. They have to be, if you don't have it labeled as a zigzag, a flat, a expanded flat, a running flat, any one of those 4 patterns, that's the only thing a W wave can be. That's it. Then you're wrong. What do I have it labeled as? A zigzag. Okay, zigzag X wave. Beautiful. You've started down. There's your A wave. Working on your B wave. Okay, this is probably, we don't know what it's going to be yet. Okay, it could be literally anything. B waves can be anything except an impulse. Okay, it could be a triangle, could be a flat. Looks like this could be 5 and you're working on a B. It might be another zigzag. Don't know. We'll have to see how it pans out, right? But I'm not concerned on what it is yet. I'm only concerned when this breaks significantly to the bottom of this A wave, right? Because I'm not ready to buy it yet. That's the beauty about this Elliott wave is that I don't really care what B wave is right now. I don't have to know because I'm not ready to buy it yet. But the reason I'm showing it to you is because it is something that you can buy when this market turns bloody, okay? Because when this B wave is done and this A wave flushes, okay, and you come down here somewhere in here, then it's time to buy. Okay, now I'm not recommending catching a falling knife. Okay, look for a reaction. When you get the reaction, wait for the pullback and then buy, and your stop's at the low. Okay. And that would be a double zigzag. Now, I said before, let a simple pattern be a simple pattern first, right? Don't just prematurely start labeling combination patterns. Well, I didn't. I had this as A, B, C, A. It's a W now. Okay. And I said, prove it to me that you're giving me 5, which is the same thing I'll do down here. Prove it to me that you're giving me 5. So I will watch on that hourly time frame, off of this low. I'll say, prove it to me. Give me 1, 2, 3, 4, 5 off of the low. All right. You've now proved it. 3 back. Let's go. Okay. But if we go bigger, okay, and why I'm interested in gold. All right, here's my labeling right now. This is just the first wave of 5 that should push, okay, and you would get to buy somewhere around here, should push us to near $3,000 an ounce. Okay, is it going to get there? I don't know. Okay, it could be 2,800, could be 3,200. I have no idea. Okay, we can only measure it once we get our third wave in, bottom our fourth wave, okay, and then we can look at the structure and start measuring, right? Until then, I can't measure anything. There's nothing to measure. Just projecting out. But it makes sense, okay, from a structure point of view that we can easily get to around $3,000 an ounce, okay? And you can dang near double your money on this in a down market. And that's why I'm bringing it up for you guys, the subscribers, okay? Oops, I didn't want to go that low. I usually just keep this on the daily. So yeah, that's all I got to say, right? Be a boss. Be a wizard. Be a boss wizard. Smash that like button. Throw me a comment down below. Have a good one.